Hey guys, decided to do a video post for this week since I haven't done one in a couple of weeks, and also decided to go ahead and do the recap as a video as well because I know there's a lot of free subscribers that like to lurk and soak in what they can. I do like to sneak in some educational bits once in a while, and so why not include the recap as a video as well. So I've got the chart of ES here, and I want you to disregard for now purple levels and blue levels and just focus on the boxes, right? So we've been talking about this box for a couple of weeks and how the direction we broke from this box was going to effectively be everything, right? If we break to the upside with continuation, we're making new all-time highs, and probably not in a small way. And my concern for the possibility of a break to the downside is that you can see this move up was pretty aggressive and pretty quick, right? This is really the first time that we have put in any kind of a meaningful balance off the lows. I mean, there was some here, but after that, it was really just pretty much straight up. And so to break the first balance that we formed to the downside would be a pretty bad look. I had said, bull markets, bull trends are going to be, balance and then trend higher and balance and trend higher. And, pretty rarely do they break to the downside, except when you're, starting a minor pullback or, a routine correction. So definitely didn't want to see this, if you're bullish for, 6,100, I'm not saying it can't happen. I'm just saying like that's definitely not what you wanted to see. So I do have all hours on this chart. And, one of the important things about ES is that, you are seeing the 24-hour action. If you're an SPX trader, you could use ticker US 500 to at least capture the 24 hours. And then your levels are going to be, nearly identical to SPX. When you're using ES, you're constantly making adjustments for, the contract premium associated with ES, which changes over time. And so, it is a little bit annoying to people and intimidating to people at first, but, there are converters that will just automatically script out that math for you. I mean, you could just look at the close or the low, of a given day and say, okay, well, it's 10 handle difference, right now. But I do use ES because I do believe it's the source of truth. And, even if I'm trading SPY or SPX, I do use ES because of that reason. And, we do have a lot of members that trade SPY and SPX. So we talked about on a breakdown from this box, which let's just call it 55.85 to 56.65. We had talked about, maybe 71, being the bottom of the range. And you can see we had kind of this look below here. And then, back to the top of the box that made for a nice long. But, my first target was 55.30, I said, just to make kind of a round number, but 55.32 half. And that comes from, a high time frame volume profile spot. And, I intentionally left volume profiles off of this chart because, again, it can be a little bit intimidating, but I would draw your attention, over here to the left, and kind of we'll zoom out a little bit and point out, first of all, the importance of, this spot, right? Both from above and below. And we had, prior to the nasty sell-off, we had formed a box in the 54.32. I'll just say 54.32. It's 54.32 half I used to 55.32 half roughly. And so this was a key spot. And if you recall my video that was, free, the path to new all-time highs, these are basically the same levels, 54.32 half, 55.30. I think I, just said go ahead and call it 56.30. And this 56.71, which we didn't quite make, we had 69.75, was really kind of the last, potential spot that we could fail. But you can clearly see the importance of 55.32, just from a technical perspective. And real quick, I'm going to switch over to just cash hours only, because again, ES trades outside of regular trading hours. To just, again, I'm going to give you another look at both 55.32, this 55.85 spot, but then also this kind of hilarious because this was my second target was 54.87 because that was basically high of day from Wednesday, August 14th. And so we had an open gap there. And I did put on RTH because again, this is kind of funny. Like this spot here, basically 87.75 to 91 is the level that I had used. Gap, this is contract roll. But I mean, still gap it, come up here, gap it. We close right under it, gap down. We close here, gap over it. Like it's just a pretty bizarre spot. And so I wanted to point that out on cash hours only. But so that was my second target past 55.32. Now the fact that we sort of balanced and chopped in this, I guess it was around 55.06 to 55.65 range. This was Tuesday, Wednesday. Well, Tuesday was here and then into here Wednesday, Thursday, made sense. And I'd mentioned that, sort of hanging around that spot into NFP made sense. And the reason for that is, again, it's a high time frame spot on a volume profile. It's a high volume node. And, for simplicity's sake, let's just say they tend to be a little bit sticky, right? So a lot of times, you hit one and then you just kind of sit around and build more volume in that spot, especially if you're waiting on like some kind of key data. And NFP, I'll say this, like everybody's stuck on CPI, and I understand that, especially if you just started trading in the last couple of years. CPI has been huge, but NFP is like far and away the biggest data point in the market, like period. To me, at least over like decades. For the most part, that's going to be most important. We had, a couple of years where CPI got the spotlight, maybe if you believe that there's going to be inflation 2.0, in a couple of years, maybe CPI gets the spotlight again. But for now, and to me, likely the next, year and a half, I think, NFP is going to be the most important data point. So, finding a sticky spot and, sticking there makes a lot of sense into that key data point. And so the next thing I'm going to cover is, basically what happened on Friday. And we had done a little exercise with the students that are in the TDS course and talked about our possibilities for Friday and where we would go if we had lost, Thursday's low, for example, and also interpreting some of this price action here. So that's where these levels come from. And what I'm going to do is I'm going to slide over in just a second the price action and volume profile from the week of August 11th with the same levels and just kind of have them side by side so you can see what happened here. So this is just, again, educational pearl. And for those of you just completely unfamiliar with volume profile, this might not make any sense to you at all. But there's just a number of you that have delved into volume profile a bit. And I think, potentially it will be very eye-opening. All right, so I've added the weekly volume profile for last week as it existed prior to Friday's action. So this goes through Thursday at 4 p.m. So you can see the thin profile as we sort of nuked into Tuesday. And then we formed sort of this nice balance into non-farm payrolls, right? The market is just pausing, chop, consolidate, balance, range, whatever you like to call it, before it makes a decision on NFP. And then I'm going to flip back to the week of August 11th, which I have here, and the volume profile there. So, sometimes I've got this on regular trading hours only. So again, you can see this gap. And I want you to notice this gap at 26.25. And then, now I'll go back to all hours on this volume profile, but I'm going to just kind of flip back and forth and you'll see something interesting here. All right, so I've got them on the same window, right? And as we came in Tuesday, notice this area here on this volume profile, and when I had regular trading hours only, you saw this as a gap, right? This candle wasn't here because it took place pre-market on data. So there was just this big gap here and you can see there's no volume there, right? It's very, very thin. And so as we come in on Tuesday and, we sort of dip into this spot and it keeps popping out, and it's not quite ready to fill this gap, right? And that's because, to me, of the sticky nature of 55.32 as we await NFP. But I would draw your attention to these levels here and these key rejections. Okay, so we tried to come in here to this low volume node. Price popped out of there, and it came right up to 5565. So it pops up to 5565 the week of 8/11's VPOC. Okay, we sell off from there. We come back up. We test 5551 half, which is basically the bottom, the very sort of edge of this distribution here, right? You've got volume here, and we'll get to that in a minute, but really the proper distribution is up here, and so we reject that from below. Now, where the 26.25 comes in is, again, we had a gap under 26.25, and you can see, zooming in on this week, it was a bit of a key battleground, right? Sellers tried to defend. What are they trying to do? They're trying to keep it in this low volume node and fill that in. Okay, buyers step in. Okay, sellers defend. You actually get them squeezed, right? And that's what takes us to the 65, stuffed back down. And you can see, this was sort of a key battleground until finally on Thursday, it looks like after this defense here and the 5555, I have, it was basically the developing value area high for the week, and that really, if you wanted to be super picky and zoom in, you could say that was sort of where you tapered out of this distribution here. So to me, what's happening, and again, the students nailed this, is you're getting rejections of this upper distribution here is sort of the short answer, right? So sellers are saying, no, thank you. No, thank you. They're working price down, putting more and more pressure on this gap. And so what's going to happen, if they get their way, is they're going to go ahead and fill this gap, come down here to 87.75. So what level was key to that? Well, the 26.25, right? Because that was the gap. That was actually, if we were on regular trading hours, you would see there's absolutely nothing there. And so the defense from below, sellers were just walking down this profile, walk it down, walk it down, walk it down. And then finally, they get the touch of, it's held right off of 87.75, 88.5 overnight. And then, finally did make its way through. Now on NFP, we get that rally back up through 87.75. Where does it stop? Right at the top of this box, 5432 to 5532, which again was a key high volume node on volume profile higher time frames. And we just liquidate straight back through. And this time, that low volume area was really just had nothing for it. I mean, we just buttered straight through it and came straight down to this 5432 spot, which was, a full weekly value traverse of that 811 profile. You can see we did, if I drill into the 5, you can see this was an insane pop off 54.32 half, and that was the good spot to be covering, your day trade shorts. Certainly, if you had 0 data expiry options, you were not holding through that. And now we're at this point where sellers appear to be defending 5432 half from below. And so I'll click back, just one last look at the other chart, side by sides. So you can see that 32 half was the value area low if you're on all hours on TradingView with the same settings that I use for the week of August 11th. You still have some week that we haven't traded down through as of now. But we are coming into some critical spots here. And so, in the rest of the video, under the paywall on the post, we'll talk about, how we're going to play this, where we're going to look to get short, and where we may look to get long. So we do have, our weekly plans and our daily plans, and then, a Discord is included with the newsletter. So if you're interested in joining us and checking us out, go ahead and subscribe through Substack, and we'll get you in the Discord pretty quick.